Hello, fellow traders. Tis I, TheRumpledOne, coming to you Friday, December the 17th. The year's 2021. Let's talk trading. It's time for the weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. Looking at the weekly chart, the week has gone back to green. Earlier today, the weekly candle was red. As you can see, we're 92 pips off the low, 111 off the high, and 24 above the open at the moment. The daily candle, some interesting occurrences here. You can see we crossed below the monthly open today. We've also crossed below the high of the opening range for the week. We also crossed below the low of the opening range for the month. Basically, the range of the current candle has covered the body of the previous candle. You can see we're now coming back off the low. So the green rats looks like they might be getting some action at this point. Once again, simple horizontal lines, nothing fancy. As I mentioned earlier, we're 31 pips below the monthly open, 377 below the yearly open. You can see we've put in the yearly low this month. We're back into the inside bar area of the inside bar that occurred 4 days ago. And you can see here on the dashboard, there's lots of inside bar action across the different pairs. Another muted day it appears to be. Only 3 pairs at 100 or more, with the pound clocking in at 84 pips at the moment. Trading the buy zone proved profitable. There was one chance here you may have gotten your fingers burned, but beyond that, so long as you took some profit, and you can see how the day's muted, you were okay. So when days are muted, you want to take your profit when you can before it comes back the other way. Yesterday, you can see during that pound news, the pound news price shot up, but this would have been a return bar, large body like that, and you can see price came back to the open. Now it took a while to get there, but this is one of those things. In fact, let's see, this candle happened at 1400, and here's the 1400 candle here. It almost reached it, so it took it 26 hours. Question is, would you be willing to wait 26 hours? You had a top scraper signal here. You had a holo or a 1, 2, 3 trade right here. And you can see price went down, came back up, never threatened to stop, and then fell down below. Green rats, get ready to feast. You can see on the M30, the range of this candle looks like it's covered the body of this candle. And when you see the range cover the previous body, you know the market is reversing, at least to that point. And then it's also could be in a ranging situation. So for example here, price covered this body, price covered this body, so you can see the market was ranging. And then we had a little breakout here, and we didn't have a price covering the body until we had one here and then one here, and it reversed down. And coming up next year, we'll be doing some more things about price covering the bodies. But I'm saving that for next year. We've got enough on our plates for this year. Okay, the pivot trading plan. Near the pivot, bias was long. So you can see price came down to the pivot, bounced back up, but then continued on down, approximating S1 here. We took out the pivot. We haven't taken out this daily pivot yet. We're halfway through the month here on the 17th. We've got 2 more weeks of trading ahead of us. In and out of the upper wick zone, in and out of the lower wick zone. Once again, showing that body's, the previous daily body's been covered. For the week, the range, 202 pips, 58 percentile, so we were above the average over the last 12 days, which was 188. The high minus previous high, we actually broke out on the week, 86 pips in the 83rd percentile. But notice the weekly average was minus because we haven't been breaking out very much on the upside. To the downside, we didn't break out. The high minus close for the red rats, 108 pips so far. Close minus low, 88. So both rats were fed. Buy zone traders, high minus open, 135. And open minus low, 68. So buy zone traders also had a chance to make a profit. Once again, simple horizontal line trading. And speaking of horizontal lines, which is about all I ever talk about, right? We can see here the wall mall lines for this hour. Already paid off to the north. We have the previous H1 low between the wall mall lines. So rather than wait to 50, you'd short at 55. And take your chances to see if it pushes the range more. And the last hour, which was a 12 o'clock hour in New York on a Friday, you can see that the ranges start to fall as opposed to expand. On the lower high, higher low chart, you see we had a 3 ball at the bottom. Breakout here on the M5. Nice opportunity to pick up pips. Ditto on the short. You got one chance, second chance, and a third chance. And that's just trading with the candle color at the line. And let's see. I'm not sure why I have this. Oh, this is the H1 breakout, or the previous. Yeah, this is H1 breakout. So you can see here we are inside the previous H1. Not much action happening there. Let's see, going back to the ranges here, let's also just take a look at the month since we are halfway through. We're still at the 0 percentile. Average over the last 12 months, 413 pips. We're about a little past halfway. So look for the range to increase. So we're either going to make a lower low or a higher high for the month. It doesn't have to happen, but statistically, it most likely should. We haven't broken out of the previous month's high. In fact, we're 324 pips below it. As far as the low goes, we did have a breakout of 34. But now we're above the low by 99 pips. So we'd have to have a really nice push down, but ditto to the upside because high minus closes 115 pips. So we're almost in the middle of the current range of the month. And you can see here, high minus open average over the last 12 months, 189. We're only at 79. And open minus low average at 223. We're only at 135. So you would think somewhere between now and the end of the month, something's got to give. We pretty much almost have to hit those ranges. We don't have to, but statistically speaking, we do. And so we want to do things that put the odds in our favor. So if price gets near the high or the low, the monthly high or low, I think we want to look at breakouts rather than look for reversals at first, especially while these numbers are low. So one would think we probably should see from the current price, we should most likely see a move somewhere, I would say between 150 and 200 pips, either to the upside and or the downside. Maybe I should say or and the downside. So we have to see if there's any news events that could trigger that. But that's what that's what I'm looking for. So that's what I'll be looking to trade these methods near those areas. And part of keeping it simple, which is our monthly, I guess the monthly focus is having a simple way to analyze the charts. So for example, just looking at the distance using statistics, that's pretty simple. It's no real complicated math. It's not like I'm using some Fourier series or linear regression or any higher math. This is basically simply addition and subtraction here, and divisions just to figure out percentages, but nothing you can't do with a calculator or a napkin. A simple 4-function calculator. So, fellow traders, I hope you had a profitable week. I wish you a fun and safe weekend. And when you come back to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is TheRumpledOne, over and out.